My name is Peter Brennan and I'm Chairman of Bid Management Services. This training tutorial will cover two related topics: pricing strategies and how bids are assessed and marked. I hope you find this presentation useful and practical. This tutorial is part of a suite of online videos we have prepared about tendering and procurement in Ireland and in Northern Ireland. You may wish to view some or indeed all of the other presentations. Once you complete the Tender Training Excellence Programme, you will have the confidence and ability to bid to win. This presentation is based on chapters 12 and 14 of our new book, Public Procurement Rules of the Road. I really encourage you to get a copy, as it provides an A to Z perspective of the tendering and procurement environment in Ireland and Northern Ireland. The Kindle version has over 200 hyperlinks to key documents and websites. The golden rule is to price to win. It is not possible to provide absolute advice on pricing strategies, as markets for goods, supplies and works are quite different, and the dynamics will change depending on national economy factors and the size of the contracts tendered. Furthermore, a small supplier will have quite a different perspective to a large multinational, where activity-based costing techniques are well developed. Suppliers' approach to pricing should be based on their business needs and supporting sales strategy. This does not mean you need to have the lowest price, but what it does involve is a commercial assessment of your price compared to that of your competitors and a price that will win you the tender. You also need to be confident that you will outscore your competitors in the non-pricing parts of the award criteria. A critical starting point is knowing what is called your pricing point. So if you have lost 5 consecutive bids and you got your marks on price, as well as the marks of the winning suppliers, this will tell you how far off you are in terms of the price that is required to win. You have 2 choices. Both of them are quite reasonable. You either reduce your costs or you decide not to bid. This assumes you submitted a cost proposal that fully reflected the actual cost of project delivery, to which you added a defined profit margin. It would also be reasonable to assume that you have a predetermined profit margin below which the company's board or the shareholders will not approve proposals for tenders. On the other hand, you might be new to this area of work and have to start from first principles in terms of submitting a price proposal. If you are the incumbent, there is nearly an automatic assumption that you will reduce your costs in a rebid situation. Whichever way you approach the pricing of a request for tender, you must always price to win. You need to be fully aware of the balance that is inherent in being capable of delivering a solution and delivering that solution at a profit. You also need to know the buyer's budget, or to have a good appreciation of its approximate size. The most successful suppliers will know to a fine level of detail the prices that their competitors charge. Your pricing strategy needs to be based on an assessment of this pricing intelligence. The most frequently used formula is that the lowest price secures the maximum available mark. The formula shown illustrates how this works in practice, where 250 out of an overall total of 1,000 marks are available for the proposed price, and as a supplier bids at a price, in this case €1,300, much higher than the lowest bid of 1,000. In this working example, the higher price bidder loses 58.3 marks because their bid was 30% more expensive than the lowest price bid. There's a lot of talk about value for money. So what does value for money actually mean? Well, to some ill-informed buyers, it means the lowest price for the poorest quality. Value for money is essentially the provision by suppliers of monetized benefits, be they in the form of savings, productivity improvements, or efficiency gains. In this context, cost means consideration of the whole life cycle. Quality means a specification which is fit for purpose and sufficient to meet the customer's requirements. Sustainability means the economic, social, and environmental benefits considered in your business case as they impact on the procurement opportunity. Thankfully, there has been a rethink about value for money among the more strategic buyers. As a result, many buyers are becoming responsive to what is called a value selling proposition as distinct from a pure price bid. So if you are responding to a request for tender that requires an element of value for money, consider some of the following issues. Firstly, demonstrate the lessons learned from previous contracts and how they can be applied to the contract that is being tendered. Demonstrate how your experiences can save the buyer money. And not only save the buyer money, but quantify the impact. Set up a web portal to support project management. Provide free workshops on topics of interest to the client. Also offer the live sharing of documents, for instance, a specific website for that tender that will allow buyers to review progress and keep updated on all developments. Also communicate your subcontractor selection methodology and general management processes. Finally, provide the buyer with unique legacy know-how that you develop as part of project delivery or indeed based on your wider experience. If you claim to offer a value for money solution, then explain precisely what you mean with reference to a costed, worked example. And if possible, compare your VFM proposals with those of your main competitors. The Office of Government Procurement, CPD Northern Ireland, and other buyers have a remit to achieve savings through the use of smart procurement. They expect and should therefore get your best solution that will result in measurable savings. So in addition to setting out your proposed solution in a tender, go a step further and try to quantify the savings, however small they may be. Admittedly, not all solutions are amenable to the identification of precise savings. So if this is the case, you might then communicate how your solution will drive project delivery efficiencies. Improving productivity is also an important issue for buyers. So consider, where it's appropriate, adding features that could improve performance both within the project and indeed outside its parameters. Buyers are more impressed if they get pricing proposals that are fully justified. So if you submit a fixed fee proposal, also provide a detailed budget breakdown justifying the components of that proposal. In that way, the buyer can see how you intend to allocate your resources. Err on the side of providing more data rather than less. If the request for tender format allows it, explain these cost assumptions. This will give the bid evaluators confidence that the prices are not only realistic, but an accurate reflection of past performance. If at all possible, use graphics to communicate your pricing proposals. Getting shortlisted on a framework is a great achievement. However, you need to be prepared for the first mini competition that will involve you submitting a price for a defined drawdown contract. The rule of most framework mini competitions is that the price you submitted as part of your original bid response is the maximum permissible when subsequent price proposals are made. Thus, when a mini competition is opened, if you had quoted, for example, €100 per hour, you are not allowed to bid any higher than this for the duration of the framework. Buyers' experiences with mini competitions are that this is a form of procurement that drives down costs, often quite dramatically over a relatively short period. What happens is that the shortlisted companies proceed to outbid each other to secure the available work. Inevitably, the lowest price bid gets the contract, as in most cases the weightings attached to non-price criteria are much lower than the marks available for the price. Suppliers need, therefore, to be very mindful that in dropping their price to secure contract work, they do not fall below the net profit margin that determined their decision to bid in the first place. For tenders with a value above the EU threshold, it is recommended that a bid budget be prepared, which could include some of the following elements: the cost of your pre-bid research, the cost of personnel time on bid preparation, third-party costs that could include, for example, the costs of external advisors, development costs, web design, communications, production costs, including printing, graphics, photography, folders, and other costs, travel for example. You may not be able to offer a discount, as many pricing schedules in tender documents do not allow for this. However, be prepared to offer a discount as part of your pricing strategy. An informed buyer will ask for and will be attracted to discount proposals. The attraction of a discount from a supplier's perspective is there is a recognition that for greater effort, the buyer will continue to spend and use the supplier. It is therefore not at all unusual for buyers to request percentage reductions in prices over, for example, a contract with an overall value of €100,000. The buyer's discount may result in your forecast profit margin unless you manage to restructure the cost components for the delivery of that service. Buyers are now required to seek explanations from suppliers about abnormally low or low-cost tenders before taking action to reject a tender. Buyers are also allowed to disregard tender responses with abnormally low prices because they are in breach of international environmental, social, or labour law provisions. Thus, a tender which might be regarded as abnormally low may be rejected, but it must be done so with an investigation. As regards works contracts, the Northern Ireland Department of Finance and Personnel Guidance recommends that abnormally low tenders should be identified on the basis of an adjusted average, and in this case the higher tendered price is ignored. The general rule is that where a tender price is more than 15% below an adjusted average, it should be considered as an abnormally low tender, and the supplier should be asked to clarify the situation. Ireland's Construction Work Management Framework for works contracts also recommends that buyers should seek comprehensive written information where there is a suspicion that a tendered lump sum may be abnormally low. Ensure that any pricing schedules provided in the request for tender are completed in the format provided. Failure to do so could result in your bid being deemed non-compliant. Remember that prices must always be presented exclusive of VAT with the VAT rate indicated separately. Where price is the sole criteria, the contract should be awarded to the lowest price bid complying with the published requirements. Unless expressly permitted to do so in the request for tender document, do not qualify your price or cost proposal. Adding variations to a bid in certain circumstances could disqualify the tender response. So if you're unsure about the buyer's intention about variations to contract, then ask a clarification question. Our tender tip is that you should only bid if you are satisfied with the projected net profit margin and contract payment terms, and in no circumstances should you bid if you cannot price the tender requirements. I will now cover the marking of tender documents, the maths exam as I like to call it. Tenders are very often won and lost on the split of just 1 percentage point. So if your writing falls short on the most minor of details, you could well end up in second place. Knowing how bids are scored will help you stay on high alert as you and your team write and respond to the published award criteria. Beware that buyers are trained to eliminate non-compliant bids and to deduct marks when evaluating award criteria. For instance, where suppliers respond inadequately or incompletely to the guidance provided in the tender documents. It is hugely frustrating to find out that your bid document was never assessed because you forgot to include a document that was requested in the tender documents. It is even more annoying to find out that you came second, losing by less than 1 percentage point. I will now take you through the steps the buyer should go through from the time your bid is submitted to the end of the process. That is when a preferred bidder is selected and unsuccessful suppliers are notified about the outcome of the tender competition. The Office of Government Procurement's guidance to buyers is that the evaluation of tenders should be carried out by a suitably competent team, and that the evaluation and award process must be demonstrably objective and transparent and based solely on the published selection and award criteria. For larger projects, that is those with a value of €25,000 and above, it is standard practice to have the evaluation of tenders carried out by a team with the requisite competency. This may include a competent person from outside the buyer who is directly involved with placing the contract, or a person from another comparable buyer organisation. Transparency and objectivity are best demonstrated by the use of a scoring system or a marking sheet based on the relevant weighted criteria, including price. The evaluation process for tenders above EU thresholds is very similar to the assessment of below threshold competitions. All tender competitions require buyers to publish pre-qualification or selection criteria and separate award criteria. Buyers may choose to award contracts on the basis of the lowest price tender, or what is called the best quality price ratio, specifying, for example, in addition to price, various other criteria, including running costs, servicing costs, level of after-sales service, and technical assistance. When a contract is being awarded on the best quality price ratio basis, the tender documents must state the relative weighting for each of the award criteria. New or amended criteria, including sub-criteria, cannot be introduced after the bids are submitted or in the course of the evaluation process. If this happens, and it does in reality, there may be grounds to have the tender competition legally challenged under the EU Remedies Directive. So in summary, the evaluation and award process must be demonstrably objective and transparent and based solely on the published criteria. The Office of Government Procurement's templates for supplies and services list the typical selection criteria that appear in most bid documents. They include a form of tender or a tenderer statement that should be completed by the primary contractor. That is the company that will have the relationship with the buyer. Using the European Single Procurement Document, which is a self-declaration form covering the financial and economic standing of the primary contractor, this will capture details of required insurances, tax clearance, and audited accounts. Selection criteria also include evidence of technical and professional ability. That is the provision of short or indeed long CVs, evidence of academic achievements, specific details about required competences, for example, membership of professional bodies, and the role and responsibility of each team member in the delivery of the contract. In addition, some tender documents ask for details about relevant experience with reference to case histories. And finally, a declaration is usually requested about the personal circumstances of the tender, and this deals with situations such as bankruptcy, professional misconduct, fraud, and the non-payment of taxes. In most cases, for example, if the requested documents are not provided or are not completed correctly, a pass-fail rule applies. So if you fail even one of the published selection criteria, the evaluation team will not consider the bid response any further and your bid will be deemed non-compliant. You will be informed about this when the results of the competition are communicated to all tenderers at the end of the procurement process. There are several types of evaluators, so it is important to know their particular focus and to write to address their respective agendas. Keep in mind that while evaluators will be competent in their subject area, they may not be experts on your specific technology and on your proven solution. So explain terms, concepts, and processes in a comprehensive and understandable manner. You should also be aware that buyers often outsource the evaluation of some aspects of complex tender bids to third-party evaluators, including public sector officials from comparable organisations. Thus, for most bid responses of any significance, you should assume that a team of expert evaluators will cast a very critical eye on your bid proposal. Once the evaluators have been given adequate time to review all the bid responses received against the public award criteria, they will be brought together as a group to assess each bid one by one. The evaluation team will be provided with a scoring or a market sheet by the buyer's procurement officer and will use this marking system during the evaluation. The scoring methodology shown on the slide is used frequently and is a good indicator of the range of marks available and the justification for the award of the marks. The evaluation team will usually comprise the key decision maker, the technical lead, a senior manager, somebody responsible for project delivery, the procurement officer, and perhaps a subject matter expert from another comparable buyer. It is best practice for these evaluators to have a general discussion at the outset about the overall standard of the responses received and the key issues that have emerged. If they have questions of interpretation about the guidance provided to suppliers, these issues should be discussed before each bid response is individually assessed. Then the chairperson of the evaluation panel should ask each member for his or her comments on the relative strengths and weaknesses of the bid response under each section and as appropriate under each subsection. A discussion then follows, as differences of opinion are quite commonplace. The outcome, by consensus, is the allocation of a mark which is noted by the secretary to the meeting. Once this is done, the evaluators move on to the next section of the bid and allocate an agreed consensus mark, and so forth until all the non-price award criteria have been assessed comprehensively. The panel will then move on to the second and subsequent bid responses and repeat the same process. So when all the bids have been assessed, it is best practice for the evaluation panel to reflect, with hindsight, on the provisional marks allocated to make sure, having looked at all responses, that some bids were not marked too harshly or indeed too generously. Once that is done, the marks are then confirmed and recorded. Normally, the panel will not have to hand the marks allocated for price, as these will be calculated separately by the procurement officer, and this mark is then added to the non-price marks once the evaluation of all bids are complete. The highest scoring tender, that is the one with the highest marks, should then be identified. The evaluation panel will then sign off the final marks as the basis for their recommendation to the buyer's decision maker. For many tenders, a decision is taken at board level or by the senior management team for low-value tenders. Once the evaluation has been successfully completed and the buyer's decision confirmed, the procurement officer will then write to the preferred bidder and to the unsuccessful suppliers. A quite different approach is taken to the scoring of responses under a framework agreement mini-competition. In the vast majority of cases, the buyer will ask the shortlist of suppliers on a panel for a price for the services or goods to be procured. Where this is the sole criteria, the lowest price bid will secure the contract. Tenders are evaluated in a very similar manner in Northern Ireland. Most contracts above 30,000 sterling are awarded on the basis of the most economically advantageous tender criteria. For supplies and services below the EU threshold, the lowest acceptable price that meets the technical specifications and any mandatory requirements or minimum standards is used. Exceptionally, the best combination of price and quality will determine the award criteria. Northern Ireland buyers are particularly mindful of tender prices for works contracts that might be considered to be abnormally low, and detailed guidance has been published to address that issue. As only electronic submissions are made in Northern Ireland, most tender responses are assessed in the first instance by individual evaluators. Then a meeting of the team is then convened to reach a consensus mark under all the published award criteria. Once a preferred bidder has been appointed, all unsuccessful suppliers will get written confirmation of their marks and the detailed comments of the evaluation panel. There are some key messages. Every word, sentence, and paragraph that you write attracts or loses marks. Failing to address the tender requirements published in the request for tender with a sufficient level of detail is the primary reason why marks are lost. So err on the side of providing a more complete and concise description when writing your bid response documents. Our tender tip is your bid should always aim for an A+ mark, and the bid team's ambitions must be set at this high level.